What's up YouTube, it's Louis here bringing you today's cryptocurrency video. We're going to take a look at Bitcoin. Let's look at the weekly time frame because we just started the new week, and then you can see here that we've closed quite a big red candle, like with the bodies, so to say. Not much wicks to the downside, no wicks to the upside. So for me, of course the wicks are telling me that I was down there, but I didn't like being down there. But for me, look, you've already almost filled in that wick. I do think that because you've taken out this candle, there's a higher chance for us to roll over back to this 55 EMA basically, and that would be the level of, if you look over here, that would be the level of 43,600, and every single week has crept up. So last week is at 500, the week before 400, the week before 150. So it's crept up like almost $450 in 3 weeks. So this 55 EMA. So let's go take a look at the monthly time frame. You can see that actually that's lining up pretty much the same. It's a bit higher, 43,975. So as long as we're closing monthly candle above that, we're good for continuation. You're still printing higher lows. You're still above the 20 EMA, which is your continuation trend line, your continuation of the bull run. That's what I tell my students. The 20 is my trend line basically, and then the 55 is your double brick wall. So if we were to fall into a bear market, if you look over here, your bear market low would be 21,800 on the monthly time frame. On the weekly, it's a bit different. It's white line, look over here, 24,000 basically, but that's the 200 EMA. So let's now look at the daily time frame. We haven't done a bearish cross on the weekly yet, so that's all good. We can still form that EMA repel, and even if they do that bullish cross, of course that's negative, but look what happened here. You already bottomed, well, you already touched the weekly 55 before even forming that bearish cross. So if you were to do that bearish cross, we could get similar movement like this, where you just form something like a double bottom over here, like a double bottom on the 55 weekly EMA. So let's go take a look at the daily time frame now. Turn on these drawings. Now, of course, in my last Bitcoin update, I know it was 2 days ago, but I did make you guys aware that we had fallen out of a descending triangle, and I think we had a relief rally yesterday or during the last video, but I said that we're still under it, and so we're going to continue down to its technical target. And you can see here now with that daily candle close, I wasn't able to make a video. I think when I made my video we were actually just here, slightly above it, but I said if we were to close below, we're going to reject it, or I even said if we get above but fail to hold it as support, you're going to roll over. I did also say if you were to get above and hold it as support, you invalidate further downside. But I also mentioned that if you were to get above and lose it again, you validate this target. So our target's sitting at 42,500 basically, and that's the technical target out of the descending triangle. We also have that descending channel, or this sort of falling wedge. Remember, we had the similar thing over here, and which was like a broadening falling wedge, but it actually broke to the downside. Can you see this? So you had a broadening falling wedge and actually broke to the downside, and that's why I've trying to make you guys aware of in these last few days or the last week. So of course, just because it's a bullish pattern, this falling wedge doesn't technically mean that it's going to break to the upside. It has a much higher chance of breaking to the upside, but it can break down. And so the descending triangle's target is around 42.5, but I would have to get you the falling wedge target to the downside by using the fibs, and we'll do that in a second. So if we were to break to the upside now, form some sort of double bottom over here, then we could come up to that 52k level. And if we were to get above 52k, then we've got a technical target sitting at 57,600. Now of course, with this daily candle over here, you can see every single time we closed at this resistance point / almost at the 12 EMA, you've got rejected. So look, a nice tap here and a nice tap here, and every single time you've closed near it, basically feeling it / at this resistance point, you rolled over, made a lower low, rolled over, made a lower low, rolled over, made a lower low, and at the moment you are actually creating lower lows. So I'm going to check the RSI quickly for you. So the lowest point of the dip on the daily time frame is this candle over here, this red one, and since then you've been printing 1, 2, currently 3 lower lows. Of course, this daily candle is still open, so we can't really make a judgment off of it, but if it were to close like this, it would be a lower low with the bodies. And so if we were to go off that, on the chart you're having lower lows, but on the RSI you're still having higher lows. So even if the RSI now were to go lower than this and this, technically speaking you still have bullish divergence because of this, because you have higher lows over here, but on the chart lower lows from there to there. So I'm going to delete that. So let's go to the 4-hour time frame. So even on the 4-hour time frame you would still have bullish divergence. I think at the moment you actually have your lowest low out of this whole consolidation period, or this ranging or falling wedge, or whatever you want to call it, ranging consolidation. So yeah, this is your lowest low with the bodies. Of course, forget about the wicks, but over here this was your lowest point, and since then you've been making you did have some higher lows, but then you started making you eventually made your first lower low. Oh no, you've had 2 lower lows now basically. On the RSI you're having higher lows, so you've technically got bullish divergence as well. So that's all positive. It's just like waiting for that to play out basically. We did have some previous bullish divergence start to play out over here, which was what led to this pump, but I did tell you guys that with this ascending triangle that we fell out of, it's highly likely that we're going to retest it as resistance. Look, support, 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 then you broke out resistance, then you got back above, lost it, support again, and then came back to it as resistance and now got rejected. So you are rolling over. You could say that there's a potential head and shoulders right here, shoulder, head, shoulder. Let me go on the 1-hour time frame to see that better. Yeah, you can see that now. So I'm going to measure from the bodies back to the neckline, put down the breakout, and you do have a technical target, which would be a lower low on the 1-hour time frame. So let's check for bullish div. So nothing at the moment in this area, because you're printing higher lows basically, and on here you still got higher lows. So if we started printing lower lows on the RSI, or and lower lows on the RSI but staying higher here, that would be some bullish divergence, or coming lower on the RSI, lower than this, and still staying higher on here, that would be some bullish divergence. So yeah, your technical target out of this head and shoulders is sitting at 45,300. So I'm going to go back to the 4-hour time frame because I wanted to show you something. So with this ascending triangle, if you were to get back into it and confirm that support, which would actually be above that 4-hour 55 EMA, then we would have a target, of course, at the top, or at resistance, which would be also the breakout of the falling wedge with a technical target up here anyway. And we know once we break that, you're going up to 57k. But what I did want to show you guys is a fib retracement using the descending triangle. So this was our first touch of resistance and our first tap of support after resistance, and so after that we've had a relief rally, correct? So I'm now going to measure this relief rally with the Fibonacci's, because we've basically, you can use the fibs to measure the pump to basically see where it's going to pull back to. After you've pulled back and started dumping, now you need to find your target, and this is how we get our target from the swing low down here to the swing high, measuring the exhaustion phase basically. Push, exhaustion, continuation. So we're measuring the exhaustion phase. So what I can see is that you've bounced off the 0, come all the way to that 1.272 without retesting the 0.618. You see, when you lost it, you never back tested it as a resistance. So this is why it's potential that you come back to it. And when you did, you had a relief rally, and then you come back down to the 382. So this is a great example, guys, where even when you hit that 1.272, you've come all the way back to that 0.382. You lost the 618, invalidating further downside. But after hitting that 382, you've actually come back and lost the 0.618. You've come down to the 1.272 again, and then back testing that 0.618 as resistance. So now that we're below the 0.618 over here, an amazing back test right there of the falling wedge. Once you've back tested the 0.618 as resistance, you now have a technical target at the 1.618 down here at 44,471 basically. So that is now your new technical target for Bitcoin, unless we do get back above this 0.618 and confirm that as support and stay above it, and that would bring you above the 55 4-hour, the falling wedge resistance, and back above the ascending triangle support, which would all invalidate further downside. So I do like the look of that, but again, a lot of work to do. You've got this head and shoulders technical target down here, potentially bring us to the 1618. If we can hold that, let's start working back above these EMAs, potentially form an inverse head and shoulders over here, and work our way back up above this resistance point, hold that support, work our way through the fibs, confirm that support, and we could start heading back to the top of the ascending triangle. But until you basically break above until you basically break back above this descending triangle's support at 47k, until we break back above 47k, we are technically in a technical target to 42,500, and that would be losing the 2. So you could even wick down here. If you were to lose that, you're going to come down to the 2414.